Hi, this is Tony Kiprios from Axion Financial Group, and thanks so much for joining us today. In today's video, we're going to discuss a 2022 recap. Thanks so much for joining, and please stay tuned. We're now in January 2023. So what happened in 2022? Well, for a lot of people, unfortunately, 2022 was a pretty tough year in regards to their investments in the financial markets. As you know, stock indices were down on average between around 20% and 30% on the year. Even bonds, which typically are a good hedge to stocks when stocks are doing poorly, didn't do well either. Bond indexes were down on average between 10 and 20%. This was the first year in many decades in which both stocks and bonds had a negative year at the same time. Now, we're in a very interesting scenario here in terms of the United States, the economy. We've had a lot of different things happening, which in many ways make it a very unique time regarding your investments. We have in 2022 and plan for 2023 substantial interest rate increases. The fastest interest rate increase in the history of financial markets. We also have substantial volatility coming back, which we didn't have in the previous 10 years from 2010 to 2020. We have mortgage rates increasing. We have a recession that we're either in or coming in 2023. We have substantial layoffs. We have inflation, which has been coming down a little bit, but still is at historic levels unseen since the early 1980s. So when you put all these things together, what we seem to have is a very volatile environment for investing, and also, to be honest, a very tough environment. Now, if we look at 2022, as I mentioned, stocks were down substantially, bonds were down substantially, and what I mentioned about 20-30% was stock indices. Of course, every different stock had a different performance, individual stock. Some stocks were down just a few percentage points. Some of the more well-known tech stocks, for example, were down between 30 and 75%. So, when you look at indices as an average, that gives you a good overview of what's happening in general in the markets. But every client and every person has different stories. Some people had large percentage of their portfolio in Facebook, Twitter, these type of high tech growth names. Unfortunately for them, 2022 was a very, very bad year. Now, I am very pleased to report, as you know, we focus here at Axion Financial Group on private market alternatives. Many of our private market alternatives held up extremely well in 2022. We had some funds that were down maybe 3-5%, which when you compare it to being down 10 or 30% plus, it's a very good way to kind of not lose money in a bad market. We had some funds that were up 6%, 10%, 20%. We even had a few funds that were substantially better than 20%. So I must say, as I sit here at the beginning of 2023, I'm very grateful and very thankful for what happened for many of our investments in 2022. And I think it really proves the thesis of why a high net worth investor would take the time to invest in private alternative funds. It's for the exact reason of what happened in 2022. So, it was a very interesting year, and I think it's going to continue to be interesting. 2023 has a lot of tailwinds coming at investors, and I think you have to be smart, intelligent, and properly diversified, but not just between stocks and bonds, but between stocks, bonds, and the right alternatives. So anyway, I just want to kind of recap what happened in 2023 and kind of look out recap 2022 and look out to some potential happenings for 2023. And I want to thank you for your trust in our business, and I look forward to speaking to you throughout the year. Have a great day and talk to you soon.